Welcome to the Cutting Edge podcast where culture meets crypto. Today, we're starting our founder series where we deep dive into the creation of platforms and businesses that will shape the metaverse. Our first guest is the founder of Genie. Genie is an aggregator of marketplaces for NFTs in the hopes of creating a more unified process in a fragmented universe. I want everybody to welcome Scott. Hey, Scott, how are you?
Hey, Jimone, thanks for having me.
Thank you for taking the time on this holiday week. I appreciate it.
Yeah, I always have time for you. Yeah, we had a pretty big week, so it's great to jump on some podcasts and share the great news and hopefully get more users on the product and into the metaverse.
So why don't we start a little bit with your background, how you came to found Genie?
So I grew up in New York. I grew up in a family of entrepreneurs. So I always had, this dream of becoming an entrepreneur myself and had the pain threshold instilled in me at a very young age. When I graduated high school, I went to go intern in Congress. So was working in politics for about a year. That was fun, but I wanted something faster paced. So I moved into private equity for real estate for a year and a half. And there it was mostly real estate deals in New York City, evaluating properties and meetings with banks mostly every day. And talking about refinancing properties and just moving things across the lawn for the managing director. I found that space to be also very antiquated. So I was looking to move into something faster paced once again. So then I think hedge funds was my next idea. I was looking for some opportunities where I can jump into the hedge fund industry, which is a pretty hard industry to break into. There's not a lot of opportunities. I had a tutor at the time who was teaching me all the analysis models that they use at the hedge funds. He had some really good advice for me. He said crypto is cutting out middlemen. And this was in February 2016. And I didn't know much about crypto at the time. I heard of Bitcoin and I heard of mining when I was in high school. I wasn't sure about how, the consensus models behind Bitcoin and behind Ethereum. And he said, instead of moving into hedge funds, you should probably move into what's next in the world. So he took my phone and downloaded Coinbase. He gave me some Bitcoin and some Ethereum to start off. So it was 0.1 Bitcoin and I think 5 Ethereum at the time, which was $5 each.
So I guess my question right there, how old were you at the time?
At that time I was 19.
Wow. And how old was your tutor, you said, right?
Yeah, he was about 50. He worked in the hedge fund space. He was one of the founding fathers of funds of funds. Mm-hmm. And to keep himself busy, he was really passionate about crypto. So he would tutor students, and it was kind of like a Trojan horse because he would tutor them on hedge funds and on all these analysis models that they should understand. And then he would transition them into crypto. So I'm pretty sure that he probably converted 50 students into full-time crypto natives in 2016. So that was
Did he stay in the hedge fund business or did he also go into crypto?
No, he left and now he's a full-time crypto investor privately. But all his students are doing different things in crypto. And I got to meet some great people at this time through him and also through events going on in New York City. So I was studying institutional economics in university at the time. So institutional economics is something that's really antiquated. The economy doesn't really work the way they teach you in school. And I've always been fascinated by more local economies and politics. I studied politics during my internship. I studied economies through my private equity internship. And I just knew that more local economies are better for building communities because you can have a preference schedule for each individual. And that's something that Ethereum allows you to do with dApps and with DAOs. Once I learned about Ethereum in 2016, I pretty much went full time in the ecosystem. And then I dropped out in 2018. Out of university during the depth of the bear market because I was just really convinced that Ethereum and the protocols being built on top were the next big thing.
It's really interesting because I think my story is a little different than yours in that I kind of exited stage left for a couple years when I kind of felt it to be a little bubblicious in Q1 of 2018. But you double down, right? You're where I was okay, I'll be back. I also admittedly thought we were probably 7 to 10 years away from blockchain tech really impacting the world. So what did you see, I guess, in 2018 in the depths of the bear that gave you so much conviction to kind of double down and just go all in?
I think I associate myself more as a builder. And in 2018, when the bear market happened, I was surrounded by really passionate builders, and I could see I like the passion was just like so positive sum. And I wasn't the greatest investor either. So I just invested in like people I believed in, and that's what probably kept me in the space and which got me to like convert full time into crypto. But yeah, like if I was a better investor, I probably would have left after selling somewhere near the top. So yeah, like some projects I was really interested in the time were like IESEC, which is basically Airbnb for computing power. So anyone can rent their computer power on the blockchain for like universities and for large companies that need that processing power. And then another one was Klyros, which is like a decentralized arbitration protocol where anyone can be a juror on the blockchain for different cases that need to be arbitrated. So it was kind of like a prerequisite to Upshot for NFTs.
I think another interesting path along your story is that you transitioned from being, you have this background in finance, right, in PE, then in hedge funds, and now you come in and like you would think that the next logical step is to be an investor in the space, but you transitioned into being a builder. Like when did that happen for you where you're like, okay, I want to be building stuff in the space as opposed to investing in stuff in the space?
I think this might have happened during the ICO phase, because during the ICO phase, there was just like a lot of obvious mistakes that founders were making.
Like what? If you
like A to Z, like each I think the problem was that money was so abundant and it was so easy for very inexperienced founders to just raise money, that there was no one really doing due diligence. So when they were running these companies, there was just mistakes all over the place, from operations to development to marketing to business development. I kind of learned like from each of those projects, like what issues we should be solving in crypto and like how to go about things. And then it just came to a point where I said, I can probably start building stuff. But so I actually, before founding Genie, I worked as head of business at a Japanese protocol called Dev Protocol, which is also a creator economy protocol, which provides inflationary funding for open source developers through social tokens and inflation. So I worked there for about 9 months, working on all things from product to design to tokenomics and governance. So how the protocol worked was, if you're an open source developer, which is probably the most important creators like in the world because everything's powered by open source, you would come onto this protocol, you would authenticate your GitHub repository. And then once you authenticate your GitHub repository, you can tokenize it with a social token. And then once you tokenize it, people in the community can stake the governance token for your project. And then the inflation would be split 50-50 between the creator and between the patron. So it was like a positive sum funding mechanism. And we actually delivered a lot of funding to big projects like Viper, which is a Python-based smart contract language. Okay. And yeah, so I got into NFTs through social tokens once I found out that social tokens weren't that scalable.
Right. And yeah. So then I guess how did that transition work? Right. So you're there. I mean, it sounds like we kind of found NFTs around the same time when they started making sense to us last year. So how did that journey start down the NFT rabbit hole for you?
Yeah. So part of my job was onboarding creators. So I had a lot of calls with a lot of different open source developers in the space, and also in the web too. And one of the biggest issues was that ERC-20s look more like securities, and creators, especially like the best creators, just want to focus on creating, and they don't want to deal with any regulations or any risk associated with having their own personal token. So when I was having these calls, that was always like the major concern for them. But then the other side of the creator economy is like NFTs. And when you mint an NFT is a finished product. So there's a lot less risk for creators issuing those NFTs. And those NFTs are a representation of their career as much as social tokens are. So that's when I started thinking about how to integrate NFTs. And if NFTs were just probably going to win out in the long run over social tokens.
I think that's a really interesting point there. And I kind of want to dig a little further on that. What do you think are the pros and cons for social tokens and comparing that to NFTs?
I think the first thing is the regulations. So first, I think for like social tokens, it's going to happen the same way as NFTs happened in adoption. You're going to have to get small creators that are more Web3 native to start launching their own social tokens. But then the catch 22 here is that those small creators don't have these legal teams or managers to support them in launching these complicated products. Whereas NFTs, it's a lot easier since you don't have to worry about regulations or anything. I just feel like social tokens are not really scalable. And then the second con for social tokens, in my opinion, is there's not like one platform that has really nailed down the formula and made it like really easy for creators to launch, but also for their communities to onboard. I feel like most platforms right now are KYC'd. Which kind of like cuts down the adoption rate for social tokens.
Every time I think about social tokens, I just feel like your incentives are misaligned. As the creator, I will own the most at the beginning, right? And as I'm creating more value, and let's say I want to make some more money or monetize, I have to sell my stake down to less and less, right? So each time I, let's say, monetize, I'm incentivized less to keep creating because I have less of a stake in the future value, right? But then with NFTs is like if you're getting a percentage of royalties, then like you're incentivized to keep creating value because you're always going to have it, right? So like to me, it's like long term, like what happens to social tokens long term, right? Do you want to create inflation in order to make up for that, right? But like that also doesn't really vibe into the meme of crypto either. So to me, like that's always the one thing I can't wrap my head around. Besides like what you just said with regards to securities laws and scalability in that sense, your incentives are just misaligned, right? Because I'm giving stuff away at a low price, trying to create future value for people that believe in me. And then like I'm going to be continuously selling at lower prices. So like to me, that's like the thing that like just always makes my head like kind of explode around social tokens.
Yeah, I think there's like some way you can work around that with like staking perks, where you reduce the float of the supply, but you could also do the same thing with NFTs, where if you wanted to token gate some content, you can use an NFT and stake that NFT in order to like access that content. So you don't really need social tokens in that sense as well. And then you could also replace it with like the ERC 1155 standard, which is basically like 721 plus the ERC20, which is probably even more scalable for like instead of social tokens.
Right. And then you kind of don't run into those securities issues or not as blatantly.
Exactly.
But yeah, so I guess you start going down the NFT rabbit hole. Like how does that go? How do you start finding out about NFTs? What was like your genesis into NFTs? What was that journey like?
Actually, one of the projects that I was invested in since 2016 was experimenting with NFTs in a really cool way, which is IEZEC, which is like the decentralized Airbnb for computing power. And they were using NFTs as data sets to represent data sets. So you could rent a data set using NFTs. So that was probably like the first time I heard of like an alternative use case for NFTs besides JPEGs, which really got me like fascinated by some alternative use cases. And then also in like 2017, you had some like decentralized Netflixes. One of them was sponsored by Joe Lubin. I think he was the co-founder at the time. It was back in 2017. They're not around anymore, but I always say if they launched today, it would probably be a really successful project. I heard about like NFTs for the first time in 2017, but most of the use cases like didn't pan out. And then when I was working with Dev Protocol, we were funding Viper, which is used by Yearn V2. So I was talking to Banteg at the time, who's the main contributor to Yearn Finance, and he connected me to my then co-founder, Vasa, who helped build out the proof of concept of Genie. And we worked on the integration between Inflationary Funding for Creators onto Yearn Finance. And then after that, we started speaking, and he was working on some technical solutions for NFTs. And it was at a time when I started seeing the market blow up with CryptoPunks. So this was after your purchase of CryptoPunks in February and March. And yeah, it just seems like a really, like, as a builder, it just seems like everything was wide open and all the verticals were there to grab, and there weren't really like experts in NFTs. So everyone was coming into NFTs in Q2 of last year, like all on the same page. So it was like anyone's game. Whereas relative to like DeFi, all the verticals were pretty much captured and all the like Legos were pretty much already set, right? You had like Aave and Compound and Yearn Finance. So with NFTs for builders, it was kind of like, the gold rush. So once we saw that opportunity, we said, okay, let's go full steam ahead and build an aggregator, because at the time people thought we were crazy because OpenSea had most of the volume, but we saw more DeFi native marketplaces coming into play, like NFTX and NFT20, which are built on top of AMMs. And we said, in the future, there's probably going to be a lot of marketplaces, because as more people transition into the metaverse and more of the economy goes digital, NFT marketplaces are going to be as common as online stores that we have today. So there is going to need to be like an aggregator for the metaverse.
Like, I didn't even see it at the time, right? Because even now, OpenSea has still over 90% of NFT marketplace volume at the moment.
Yeah, definitely. So at the time, NFTX was doing some volume, NFT20 was doing some volume, but besides, like, OpenSea was clearly the leader in the market. They had incredible foresight. They were building this since 2018, so they built the infrastructure for this NFT craze to take off. So like, kudos to them. And yeah, like, we just knew that with NFTs, the main difference with NFTs and fungible tokens is that with fungible tokens, you can create liquidity concentration on Uniswap, for example. So that's a really strong moat. But with NFTs, you can't create liquidity concentration on an AMM because each token has a very different property. So it would be like New York City real estate being traded at the same price on Uniswap. It wouldn't make sense because every building's different. So there would just need to be fixed prices for NFTs on these marketplaces. And that wasn't a strong enough moat, in our opinion, incumbents to fend off. So that's why we started building this aggregator, because AMMs like only scale really for floor price NFTs. And that's what you see on NFTX and NFT20.
Yeah, that makes total sense. I understand why you guys ended up choosing to go the aggregator route. Were you considering other instances? Because like you said, I mean, I still think right now the space is still wide open, but even more so 6-7 months ago, were there other options that you guys were considering as you were starting to delve into the space?
Yeah, definitely. We looked at convertible bonds. We looked at yields farming with NFTs, and we looked at like NFT as collateral. And then we went through each one with like a very intensive study and like did pros and cons for each one. So I think the most interesting one after the aggregator was definitely like NFT as collateral, especially coming from DeFi. NFT as collateral, though, there's not like a one size fits all solution. So there's probably 3 solutions at the moment that people are working on. And each solution has its own market segment where it fits. The first is NFT as collateral that looks like Aave. So you put your NFT up, you get some money, and then as the value of that NFT falls, you get liquidated. And then the protocol would liquidate your NFT on like NFTX or NFT20. The problem with that is the liquidity on these exchanges are not so great. So if someone front ran you, the slippage would be really high. Or if you wanted to liquidate your CryptoPunk, right now it's 5%. And then also these platforms only take the floor price at the moment. So if you wanted to get collateral for your punk, it would be really capital inefficient. inefficient for you. The second solution is you take like a fixed maturity date and a fixed interest rate, and then you treat your NFT as the floor price, and then you liquidate into the lender. But that's also not capital efficient for a majority of NFTs, because if your NFT is above the floor, then you probably shouldn't use that solution. But at least this way, you don't need an oracle. And then the third solution, which would fit mostly for your NFT, is you would have an auction system where you have bidders, and the highest bidder pays the second highest price to ensure competition between bidders. And then that bidder's bid becomes your loan, and you use that money. And then if you can't pay back your loan, that bidder gets your NFT. So that scales more so for NFTs above the floor. But there's a lot of solutions here. And of course, it's a lot of work to build out. And another thing is that there's also like a cultural misfit, because people in DeFi are more willing to take risk. But people in NFTs, they see these NFTs as their identities. So they're less likely to put their NFTs into these smart contracts. And that's one of the major reasons why we didn't go down that route initially, just because we feel like the market needed to mature a little more for these opportunities to prevail.
Right. Yeah. And I think that your analysis was right, spot on, right? Because these are conversations that I've been having with lending protocols, right? That want me to place my punk as collateral and give me a loan against it. I told them, number one, right, there's no mark to market, right? Like, I want it to be treated like a mortgage. As long as I make my payments, it's mine, right? The same way that people are attached to their houses, people are attached to their NFTs. So to me, I was like, there's no way under any circumstance, because it's also a one-of-a-kind asset. It's not like an ERC20 where I get liquidated, but I can buy it back, after paying the penalty. I can buy the position right back if I really wanted to. If I get liquidated out of my NFT,
Right.
there's no chance that I can buy it back unless maybe somebody is like, yeah, you pay like a 4 or 5x premium, and it just doesn't make sense. So like, to me, any of those conversations, exactly to what you said, would be exactly to that end, right? Where it's like, it needs to be a bespoke system. But on the low end, right, where it's like, it's a utility, let's say more of a utility that generates free cash flow, right? Let's say an in-game asset that generates a yield like an Axie or something, where you can DCF it, discounted cash flow it to get its current value, then yeah, it's going to be much more liquid, right? Because people are going to be able to price that in real time and set a market. And like, that to me is where the mark to market stuff really makes sense. But to your point, is that makes total sense to me with that decision of you guys deciding to go down a different route, because I don't think that happens tomorrow, right? Like, I still think there's still time before that becomes really prevalent in within the ecosystem.
Definitely. And like, exactly like you said, like the marginal rate of substitution for NFTs is really high. So for example, like, some people don't like hoodie punks, some people don't like beanie punks. And if that trait is on that NFT, then they won't even go near it. So when your NFT gets liquidated, there's a really low probability that you will get that back, because these are assets that people really feel connected to and are pretty rare.
Right. Yeah. So yeah, I want to touch upon something you mentioned a few minutes ago with regards to your co-founder. What happened there, and if you can give us some more color on that situation.
Yeah, definitely. I think it's a pretty typical founder story that you hear a lot, which is you get really passionate about building a mission out. And then as that mission goes on and as things materialize, you start to see your role in that project, and you start to see where that project is going. And there was just a misalignment between what Genie is becoming and what it takes to get Genie to become, the metaverse's aggregator, where my co-founder didn't feel comfortable. So yeah, unfortunately, in the beginning of October, he left without notice, which was really tough for the team. But yeah, we got through it. Like, everyone on the team like doubled down, and it was like really awesome to see. It was kind of like, seeing flowers blossom on the first day of spring. Everyone's like natural talents and ambitions just came out, and the entire team was really passionate and worked 7 days a week to get the product launched. And yeah, last week we launched, and it was an amazing like feeling to get through that and to launch successfully without any issues.
Yeah, congratulations. You guys launched on Monday of last week?
Tuesday, yeah.
On Tuesday, and you did over 2,000 ETH in volume, right?
Yeah, last week we did 2,200 ETH in volume, and so far we had over 1,500 users on the interface, and every day we're like getting over 100 new users, which is pretty amazing.
I remember using it the first time over the summer in the beta, and then also a couple months ago when it was in the closed beta, and then last week. And every time it's been so seamless. It really is something that I've really enjoyed using. Right, like I think I used it on Sunday, not even for like a floor sweep. I just used it so I can buy two different assets at the same time, and it was so seamless. Great to do everything in one transaction, to not necessarily be front run, but then also just like not having to do both transactions manually. To me, that's like a game changer, right? Like I'm sure I don't even like flip or trade NFTs that much. I can imagine how much somebody like a Pranksy or a Beanie, or just people that flip stuff a lot and just trade around a lot, like this is probably just like changes their lives immensely.
Definitely. So the really cool thing about the smart contracts is that if one of the NFTs that you're attempting to purchase is bought while the transaction is going on, it kind of treats it like a flash loan, where before the transaction ends, it'll refund you for that NFT that was unavailable, and then it'll purchase the rest of the NFTs, which is really cool. So there's never like an opportunity cost with gas when you're doing a transaction on Genie. And we had a user last week actually buy and sell 42 NFTs in a single transaction, which is like an all-time record, which is really cool because that probably would have taken him like 2 hours if he didn't use Genie.
Is there like a limit to the amount of NFTs that can be bought?
Yeah, eventually I think as you add more NFTs, like near 50 NFTs, you start to run into like Ethereum block limits. So it's really hard to like capture an entire Ethereum block, especially with the new 1559 like London fork. We like advise our users to do between 15 to 25 NFTs in a single transaction.
Okay, but that was 42 was the limit that you saw?
Yeah, so he sold some NFTs and he bought some NFTs, and they must have used a lot of gas as well to get that through. So they were feeling quite confident that day.
All right, that's really cool. Was there a reason where like was it just like to like a flash loan just to test out the system, or was it like a for-profit transaction?
I'm not sure actually. So the cool thing about launching is that you don't know who your users are. So you just see these transactions come up on the bot that we have, and yeah, it feels great to just see people using it. Some people that you know, and some people that you don't know.
To take that one step further, I think I saw it was either yesterday or on the day before where you tweeted something about all the alpha that was being leaked by watching the Genie bot. Care to share some of that? How you've been seeing that alpha in real time?
Yeah, definitely. So if you come to the Genie Discord, we have a bot that shows Genie transactions and Genie sweeps for larger transactions. We saw chain runners being sold at like 0.05, 0.06. I actually bought some myself after I saw those trades going on, and it shows you the username of the buyer. So when you see D Hoff buying some NFTs, you probably want to copy trade him.
Right.
And then, yeah, another like cool collection that we see being swept a lot is the Treeverse. So there seems to be rumors that they might be launching a token, and they're to support their metaverse. So yeah, we see a lot of like transactions for that. I think so far we've probably done over like $500,000 in transactions for Treeverse. And it's really cool because you also see like the Treeverse deployer buying their own NFTs as for like treasury purposes. So you see these NFT collections running economic policies through Genie.
Oh, that's really cool. I didn't even think about that. I think that's awesome because that's where your economics background comes into play, right? Understanding that all these metaverses and pretty much all these tokens are basically building out their own token econ.
Yeah. And I think that's like the longer term vision for Genie. We will be launching an API in Q1 of 2022 for metaverses to integrate into their games. So when you're in the metaverse in a virtual world, you're not going to want to take off your virtual headset and go to a marketplace, and you're not going to want to go to another tab. You want to be in one place. So our API will allow you to buy across marketplaces. So OpenSea, Coinbase, NFTX, NFT20, Rarible. In 5 to 10 years, what we'll see like Genie become an actual genie in the metaverse where you actually make a wish over voice command. And everything's executed for you.
So yeah, so I think that's really interesting. And this is me just thinking out loud, and correct me if this is real middle of the bell curve thinking, but let's say I'm in the metaverse right now. You have your API, I'm connected to your API. Does that make botting less less possible? Because let's say I'm buying it from store XYZ, where it's like you have to be in the metaverse to buy it, and I want to go in and I buy it, but I need to like kind of be there physically, so that it makes it harder for me to create almost like an NPC, a non-player character type of thing, to go in there and buy it, right? Like, does that kind of counteract botting a little bit?
Oh, that's a really cool idea. So you would essentially like token gate a location in the metaverse, and then you would have to like physically go to like a Genie store, for example, in order to buy NFTs. Yeah, that could be possible.
Because one of the things I think is a big issue, right, is on these very sought after drops, you see a lot of people botting for obvious reasons, right? Because you can get in at a really good price and you can flip them at higher prices. And I think everybody tries to figure out is how do you kind of increase maximum distribution, but then also like the people that want to come in size and buy it on the open market, right? So like I
Right.
think you're very much like figuring out that part of the equation, buying on the open market if I want to buy a large piece all at once. But then also it's like, what if I wanted to buy a large piece all at once, but not necessarily have it be bought? Like as the store owner, I want to decrease that botting possibility, but still allowing whales to buy in, if that makes sense.
Yeah, that would be really cool. I know the Bored Ape Yacht Club collection has a huge piece of land in Sandbox, right? So they could essentially set up their own store in Sandbox, and then we can integrate the API there and allow them customize it this way. Only Bored Ape owners can come into that store and do maybe a live auction like in the metaverse, and then be able to buy. That could definitely be possible. You need to come by to the team meetings more often so we can talk about these ideas with you.
Yeah, I mean, this is just me kind of like just trying to. It's interesting because a lot of times, like, I'll talk to founders like yourself, and I'll just be like, yo, like, if this is a really crazy idea, just tell me. But like, I don't know how it gets implemented, but I just know that like this would be pretty cool and I would use it if it existed, right? And so, yeah, that's why I always just kind of throw ideas out there. And then it's always fun to watch someone like yourself iterate it in real time and kind of like just problem solve it and be like, oh, all right, cool. Like, it's not as impossible as I might have thought it was.
And this is why we built Genie List, because we actually had users coming to us and saying, I don't want to list one by one all my NFTs. So we started building out Genie List, which allows you to batch list your NFTs on OpenSea and on other marketplaces. So also you can list your NFTs on multiple marketplaces at the same time, because as the market fragments, as Coinbase comes in and as OpenSea is there, buyers are going to be fragmented across marketplaces. So users are naturally going to want to like increase the exposure of their NFTs. So why not list it on just multiple marketplaces at the same time? So that's what Genie List does. And that actually came from a recommendation to enable like batch listing on Genie.
Is there an issue of an NFT being like double sold?
No, because so what happens is you come onto Genie and you select the NFTs that you want to list, and then you select the expiration date and the price for each NFT. And then you sign a bunch of transactions in your wallet, basically enabling the marketplaces to move your NFT if they found a buyer. So once you have a buyer come in and buy the NFT, let's say on OpenSea, then if there's a sale on Coinbase, obviously it can't be sold anymore because the NFT is not in your wallet, so it can't be moved. So yeah, with the blockchain, we're lucky enough that you don't have this double spend issue.
So if I wanted to do a Genie List besides OpenSea, what other marketplaces do you currently have functionality for?
Yeah, so right now we support Rarible as well, and then we'll support Coinbase when that comes out, and then we also have like a few more niche marketplaces that users may want to list. And then we also may enable this functionality for auctions if you want to do like a meta auction across marketplaces.
Oh, okay. So you could auction it on a couple different sites at the same time.
Exactly. And then you would cancel the list-in, the lowest bid is, and then keep the list-ins where higher bids.
Oh, that's really cool.
Yeah,
Yeah,
like
no,
we see this issue like a few times where people list like their art blocks for auction, and there's not like a lot of awareness on that platform, so they end up selling for a lot less than they would sell if it was listed on OpenSea, for example.
right. That's what happened with the what was it? Was it a Fidenza or a Ringer that got listed
Yeah,
on an auction platform and it sold for like such a cheap price because nobody knew it was selling?
yeah, I believe it was a Renner.
Yeah. All right. Cool. And so, I think you spoke to us a little bit about what your vision is. What are you working on next? Like, what's on the roadmap? You guys have the Genie buy, Genie list. Like, what are things that you're working on for maybe the rest of this quarter?
Yeah, definitely. So right now we're implementing 1155s, so that should be available next week. We're also working on new designs for Genie Swap and Genie List. And we're working on a new backend, which will be scalable and allow us to integrate even more marketplaces at scale. So as you can probably tell, like the backend is pretty complicated because we're handling a lot of order books from a lot of marketplaces. And that will only become more and more complicated as we add more marketplaces. So we're just making sure that the foundation is really, really stable, and we don't launch like a hackathon project to the mainstream audience, and that we get something really solid.
Yeah. All right. Cool. And then are you working on anything? I guess on like the liquidity side, like there's always these let's call them liquidity providers on OpenSea that are always throwing bids in on certain projects. Are you
Mhm.
doing anything on that side? Almost like yeah, I guess helping market makers find sellers.
Yeah, well, I actually think that you can think of Genie as a market maker because we're given supply through Genie List to marketplaces, and we're given volume through Genie Swap to marketplaces. So Genie is essentially like the market maker for the people, where they can come in and like direct volume where it's most efficient and most fair for them. But in terms of like institutional market makers, we have no plans at the moment or any products lined up for them.
All right, cool. No, I just, I know we geek out over NFTs a lot when we chat, but what's your favorite NFT that you own?
My boy, my flow boy. So I'm really excited about like the boys collection. The boys collection is like the first 3D NFT collection, and it's each piece is unique. There's only going to be 100 one-of-one boys, and the owners are really cool. So you have 888, you have Stanley and Jordan from Aave, you have BT, you have Max from Fabric, and Lerona is like a really cool artist, and I really like her approach to creating art. I feel like I'm not a big fan of like these generative collections just because it seems mostly like derivatives of CryptoPunks and so boys, each piece is unique. So Lerona collaborates with a new artist for each piece, and the piece that I have, which is Flowboy, which is my profile picture on Twitter, was a collaboration with this artist called Rick from the Netherlands, who's done work with Porsche and Apple and Ray Bans. And the reason why I like this piece is just because it looks like a genie. Um, and I'm also like a big fan of classical art and also like Renaissance art. And one thing is like one of my favorite artists is Caravaggio. He was in Rembrandt, and they probably mastered like the chiaroscuro, which is when you have a piece of light shining on a dark spot, and that's kind of the style of my flow boy.
Right, yeah, and I must say it's very unique in that whenever I see it pop up on my Twitter feed, like, I don't even need to see, who the owner is, like, I know it's you, right? The same way that, like, usually when you see my ape pop up, you know it's me. So, it's a nice piece, I like it.
Yeah, it's really like mysterious. And when I call you on Telegram, it looks cool, right?
Yeah, exactly.
When
I
it
mean, I
comes up
I
on
like
your phone.
colors. I'm a sucker for those colors, so I like it just for that. But
Yeah.
yeah, before I get you out of here, I have a question for you just that popped into my head is, what are you most excited about for the NFT space over the next, 3 to 5 years?
Yeah, I think I'm just really excited for creators in the space and creators coming into the space. I think this run was all about PFPs and mostly about art, but music is next, and now we're getting musicians in the space, and musicians is such a large segment of like independent artists. Um, and this is why I was like a big fan of social tokens. As we get more and more segments into crypto, whether it's through social tokens or NFTs, we're gonna unlock so much creativity in the world, because now people can actually go achieve like some economic value through their passion, and I think that will make the world like a much better place. So it doesn't matter where you are in the world, you can go monetize your passion. And yeah, besides that, I'm also like a really big fan of like these metaverse games popping up, like Nifty Island. I actually just got um, my Palm and my Saber, so can't wait to like tear it up in Nifty Island's metaverse when they launch. Hopefully, it's soon.
All right, awesome. Yeah, Scott, thank you for taking the time. I know it's a busy holiday week, and you guys have been so busy shipping and working through getting everything out there for a seamless experience. As a user, I've been definitely very pleased with how seamless the product has worked, and how good the experience has been. Way easier than I thought. A lot of stuff in crypto I feel like doesn't isn't as user friendly as you'd want it to be, and I think
hmm
Genie is one of those that is as user friendly as you want it to be, and so that's been great.
Yeah, thank you. For supporting us while we were building this. You were definitely there like since day one. And I always say to like other founders, influencers, and like just like thought leaders in the space play such a huge part of like the founder story, because without there's like really dark days and really good days when you're a founder. Things break, people leave, product works. Product that gets a lot of volume, but you need these positive figures in the ecosystem who see where the space is going and how to get there, just reminding you on a daily basis. And I feel like you're such a perfect representation of that.
Thank you, I appreciate that. So yeah, so thank you for your time, and I'm looking forward to everything that you guys are working on. And I know it's funny also is I've done sweeps and people DM me being like, "Hey, thanks for putting me on to Genie," right? Because like I didn't realize it existed. Or people like, "Oh, how did you?" Especially when it was during beta, people would be like, "How did you sweep all those things all at once?" And like I told them, and like, "Oh, all right, cool, thank you." So it's like it's very much like I know my wallet gets tracked, so now it's I think a great example was I used it on Sunday to buy two wolves for Wolf Game, and I knew that if I bought one, like I might have to pay a higher price on the second one if I did it like manually. So I did them both at the same time, and then like the price of everything just started skyrocketing, and I was like, thank God. I think like an hour later, I went to go buy that. I'm like, all right, let me buy another asset. And then like the prices were already doubled. I'm like, oh damn it. I'm like, I guess I missed that one. But yeah, I mean, I think it's a super valuable tool. And as NFTs become more commoditized, you're gonna see more use cases and more need for a product like what you guys are building.
Thank you.
And thank you guys for listening to The Cutting Edge. And remember, we want to hear from you. Rate and subscribe to this episode, and let us know what else you'd be interested in learning more about. Until next week, guys.